Joined now by Craig Parry. He's the CEO and president of IsoEnergy, trading on the TSX Venture under the symbol ISO. Craig, welcome back.
Thanks very much, James.
It's been like how long since we've chatted?
Well, a good while, probably a couple of years, actually.
Yeah, exactly. But you know, testimony to the value in IsoEnergy, I think, is that you continue to evolve your projects and put out great press releases. Why don't you give me? Let's start with an update of what your progress has been in the last year and what you're up to now.
Yeah, absolutely, James. So, of course, we're a spin out of Next Gen Energy, and we've been exploring that eastern half of the Athabasca Basin. We acquired a property off Cameco back in May last year. We had a drill rig out there 6 weeks later, and we announced the discovery of our Hurricane deposit 2 weeks after that. So we've been very much focused on drilling that deposit out. So we've now had a couple of programs there. We did a major program back in winter last year, and we've just wrapped up our summer drill campaign, putting out some, very, very spectacular numbers, typical of those high-grade Athabasca Basin deposits. In recent times, we've put out our drill hole 1916A. We hit 7 metres at 5.4% U3O8. So we've continued to expand that deposit, and it's shaping up to be very, very good for our investors. Sure.
And now the uranium prices are starting to recover quite a bit, well, aren't they?
Yeah, look, I think you're right. Of course, last year we saw a good strong rally in prices from about $17, $18 a pound all the way up to $29 a pound. Prices have drifted in recent times. Of course, those price rises are based on fundamental supply side erosion. So you've seen some very dramatic cutbacks in production globally from the major producers like Kazatomprom. And of course, last year the biggest news we've seen in recent times was the closure of that giant Macarthur River mine, Cameco's mine in Saskatchewan, not far from some of our projects. Cameco announced the closure there. That took out about 13% of global production. So that's the equivalent of all of Saudi Arabia's oil production coming off stream in an oil sense. So that started to now take hold. We're starting to feel prices are rising off the back of that production. Of course, the big thing that happened there with the closure of that mine is that Cameco's now had to go into the market and buy a large amount of pounds to feed into their long-term contracts. So we're starting to see the effects of that happening. Cameco started buying last year, drove that price to $29 a pound. They pulled their bids from the market back in March last year for a couple of reasons. But what they've told us is that they'll be buying strongly over the next couple of months. So we expect that the uranium price is really about to gather steam here. We've been in this very low price environment with closures having happened for 2 years now. And it typically takes a couple of years before you see those sorts of things wash through the market, and we're seeing that now. So look, we think 2020 is absolutely going to be the year for uranium. So a good time to be refreshing your listeners and viewers on the story again, if you like.
Sure. And what's the outlook in terms of reactor construction globally?
Yeah, look, a very, very good question. And if you sort of read the papers, you'd think that things aren't going great. But of course, uranium and nuclear power is the only stable baseload form of zero carbon power in the world. It's clean, green power. Those key drivers of demand for all metals in recent times, particularly China, but also India and the Middle East, are constructing reactors at a rate of knots. So last year we constructed on the planet more reactors than at any other 12-month period before that. China continues to commission a new reactor every 6 to 8 weeks. So demand is growing very, very strongly, and now you're starting to see, as I say, Saudi Arabia, India, Russia are constructing 26 reactors as we speak. So that demand side is growing very, very strongly, and that's met with a very challenged supply side. So, we think that the next 2, 3, and out to 5 to 10 years, the outlook for nuclear, the outlook for uranium is truly spectacular.
Sure. Is it conceivable that Cameco could add 13% more supply by bringing the Macarthur line back online, or is there some fundamental flaw with that whole operation that's caused its permanent closure?
Yeah, good question. Look, it's obviously a fantastic project. However, we saw in March last year, Cameco put out a technical report that suggested to us that when you factor everything in, it's very clear in that technical report that they need $50 per pound uranium or thereabouts to get an 11% IRR on that project in terms of reinstating it and then doing the sustaining capital works to keep that project going, which amounts to about $1 billion over the next 5 years. So investing $1 billion to give you an IRR on a mining project of 11% at a $50 uranium price, to our mind, that's not something that's going to happen. I think that you really need to see $60 or $70 a pound uranium before that project will deliver its investors a serious return. So we think the uranium price has got to rise very, very strongly and well above those levels before you see that production come back on stream. So, we think we're protected from that production for some time. I think we're going to have a golden couple of years in uranium.
Sure. So do you think then that that your company and or that your company will see its mine put into production before Macarthur comes back online?
Yeah, look, good question. We're a little bit, we're at the earliest of stages of a discovery. As I say, we've done a couple of drill campaigns now. We're really in that resource delineation drilling phase. We'd love to think that we can advance that project as quickly as we possibly can and catch this next cycle. I do think, given the demand and supply profile, that this next phase of the uranium cycle, if you like, will be a longer lived one than the last. The last one, of course, ran from about 2006 through to 2011 and collapsed off the back of the flooding of that Fukushima plant in Japan. So that was a sort of 5 or 6 year bull market. I think the next one will be much more sustained because of this new reactor construction, and that gives us a chance of meeting that uptick in the cycle, that sustained uptick in the cycle. But as I say, we're at the earliest of stages. We remain the only junior globally as we speak with a new high-grade discovery. It's in Canada's Athabasca Basin, Saskatchewan's Athabasca Basin, of course, so it's the right jurisdiction. It gives us and our investors the best chance of catching that the best part of that cycle.
You bet. All right, Craig, great update. Thank you very much for joining me.
Good on you, James. Thank you very much for your time.